Today we stepping into the fourth session of our online webinar. Each session has always a different aspect related to Web3, either an industry insight, best practices, and based on your demand from the Investor Circle, we were tapping today more deeper into how is how is Web3 VC working? What are the insights? What are the pitfalls? What are the key aspects? So that is the scope for today's session. And we have a mix of a few like industry insights at the very beginning, and then rounding it up with a great panel. And Mona, thank you as well for joining. We have also Michael, Gord, and Juliet joining us for the panel at the end of the session as well. So I'm also very excited about that. Yeah, I would say let's deep right in. So before we kick off deeply into the Web3 VC best practices, for the ones joining us today for the very first time, welcome also to the circle. And if you may not know the idea yet of the blog and what is the blog doing, I'll give you a brief intro about the blog as well. Because the blog itself was established this year as a privately held international chamber of virtual assets. It's like a one-stop shop for all topics related to virtual assets. It's really about supporting you depending on your life cycle as an investor, as a corporate, as a startup, how to tap or how to scale up further within the space. So we really support in terms of regulatory market entry support, licensing, since we since we very closely tied with Vara, so we follow also the UAE mandate. But also with Investor Circle, we have exciting roundtables, access to deal flows, and and overall the reason why we called also Chamber of Virtual Asset is because we offer also different programs. So, for instance, corporates who wanna collaborate either within the UAE ecosystem or outside with other global and regional ecosystem, we are fueling also that collaborations if it comes to research or writing playbooks, strategies, roundtables. Also for institution and governments, it's the same. We're gonna soon have a physical space as well. So we're also aiming to host, for instance, government delegation. Also, if it comes to roundtables related to policy and compliance. Um, if you know in your if you're a founder or you know in your network also founders who need additional support, either in stepping and having a footprint in the region or scaling up further in terms of capital raising, in terms of media presence, we're also collaborating with other ecosystems, with other blockchains and partners in the block. And last but not least, also we have a dedicated program and circle for investors. So right now we already have onboarded multiple family offices, sovereign wealth funds, angel investors, and VCs. And we kicked off already with our in-house deal flow from top tier deals that we are accelerating and showcasing as well in the future. Also, we have kicked off the webinars. It's already the fourth sessions, and in the future we plan much more. We're just getting started, so stay tuned also about our future initiatives. And where we're very excited about is also the opening of the physical space in the heart of Dubai in One Central, which is quite established also in the Web3 space with major industry players having their base there as well. So we will have an experience center and also co-working space opening and ready in Q3. So that's something we also looking forward to by end of this year. I already mentioned the Investor Circle that we're kicking off besides the webinar much more initiatives. So stay tuned and let's get right into our today's topic. So when we talk about Web3 VCs, there's a clear difference compared to traditional VCs, and the core some core differentiators are the way of funding, right? Besides equity funding that we see in traditional funds, in Web3 we see a clear instrument is token. So through SAF token, investors are able to invest directly into projects, which is a clear differentiator. This also enables to have a higher liquidity and also to exit faster through token listings rather than waiting for IPOs or mergers and acquisitions or having a longer period of investment in the traditional funds, such as from 5 up to 7 years. So this timeline are quite shorter in the Web3 VC space. Also, in terms of governance, in the classical way, board seats or formal governance structure are the rule. But in Web3 VC landscape, it's even more possible to get more active with the portfolio companies. So through DAOs and also token-based governments, investors can actually give their voting on chain. So there are much more possibilities on chain to really participate as investors within the same round and even closer with the portfolio companies. Also, what is a strong impact when it comes to Web3 investing in general is the community impact, especially when tokens are used. Community-driven growth is very crucial, especially when it comes, for instance, to infrastructure projects, or if it comes to consumer-facing applications where the token and the community activation plays really a crucial role compared to traditional industries. Another key aspect that most of you are familiar that the crypto markets are dynamic, they're evolving, so do also regulations. That's also one of the key differentiators that the crypto regulations are evolving globally. So even within the region, within countries, there are different rules and regulation when it comes to holding and investing into crypto. So this is something that is more fast-paced compared to established legal frameworks. However, in the past, we saw that it also gains more and more momentum and much more stable established frameworks in crypto as well. Also, when it comes to the due diligence, especially to technical due diligence, for Web3 portfolios, it requires a much deeper due diligence in terms of the protocols, security audits. So a stronger expertise in that field is much more of an advantage when it comes to evaluating Web3 projects. When it comes to the due diligence process itself, a lot of aspects are familiar and similar to normal portfolio due diligence processes. Besides the market assessment, is a product market fit there? How's a company, a business model, team? These are all the classic factors. Again, the technology review will be slightly different compared to the traditional VC space due to the complexity of the technology. But other than that, also the business valuation in terms of roadmap, how the token utility if tokens are used is also quite important. And last but not least, also to assess really regulatory risks, especially when it comes to go-to-market strategy in specific regions as well, to have that also evaluated. Overall, when we look at the past aspects mentioned, a very clear benefit is the faster liquidity provided through investing into Web3 projects, specifically when it comes to token investing. Also, the access to global projects, it's much more easier and faster through Web3 projects as well. Because still, as you may know, if it comes to traditional VC investing, it's still very more exclusive. So even later on when we discuss it more on the panel, within the Web3 VC landscapes, deal flow is much more dynamic, much more accessible. And that's also one of the key advantage Another part is compared to other traditional industries, of course, when it comes to crypto and Web3 projects, there's a higher upscale and higher potential return on investment, which makes it very attractive. Also, if it comes to portfolio synergies, often VCs build up their portfolios strategically. So either they're related to specific chains they want to work on, or a specific sector where they see that portfolio companies can strategically integrate with each other. And that's something which is also common practice in the space. And a good aspect is really the access and engagement as an investor to the portfolio companies by having access into DAOs and also having a higher voting say, also being on chain for some cases. So these are one of the clear advantages. If it comes to the current VC landscape, I jumped a bit too fast. Uh, I just want to share with you a quick snapshot where we stand at. This graph is from Galaxy Research. It actually captures the crypto VC invested from 2016 up to Q1 2025. What you can see here clearly, especially if we look at the yellow line, that earlier stage investments are still dominating when it comes to Web3 investing. If we look at 2025, there's a specific case where late stage investing overtook here the share. It's because of one of the largest institutional investment made by MGX, based out of Abu Dhabi, who invested 2 billion into Binance. That's the main reason why, especially in Q1, we see a higher increase. But overall, if you look at the structure throughout the years, early stage investment are still quite attractive. Since 2021, also late stage investment has been increased heavily. Also, one of the main reasons is more regulatory clarity, more advancement of the existing projects in the market. So this is also one of the key reasons. If it comes to the areas of investing, what we can observe is that, especially in the area of trading, investing, lending, in that area, the later stage VCs has been heavily active. One key reason to mention here, especially since the establishment of the Bitcoin ETF as well, and also the new trend of liquid funds, that has been one of the two main drivers why funds investing more into that section as well. DeFi still remains a very attractive a sector, as well as payment solutions. Also, if we go more on the right side, enterprise blockchain, compliance, custody solutions are especially also attractive for early stage VCs. So we have really a broad board of ways of investing, which is also the beauty of Web3. Really, we have so many use cases. So overall, we see also here on the graph a quite good mix and balance of late stage VC investing and early stage VC investing as well. So yeah, to really round it up, what we can see is token utility and token investing itself is one of the key aspects also of Web3 VC investing. We see also a clear maturity now coming in from institutions entering the space, investing in the space. Still, regulation remains a very big aspect in establishing a stronger confidence of more investors, especially traditional investors, coming into the space. And yeah, we still evolving also when it comes to narratives. Each year there has been always new narratives from RWAs, AI, even from to ZK to stablecoin narrative. We have really a selection of many industries to tap in. And with that, actually, I think it's even more exciting to tap into what those top investors are tapping into, how they evaluate actually Web3 projects in practice, where they see the next hot narrative. And with that, I would like to welcome Michael, Gord from GDA Capital, Mona from Tokentus, and Juliet from Newtribe. I'm so happy and excited to have you here on the table. And before we kick off, I would like to make a round of introduction, kicking off with you, Mona, then Michael and Juliet. Over to you, Mona.
Thank you so much for having me. I'm excited to be here. So yeah, my name is Mona. I'm the head of investments for a German venture capital fund publicly listed on the stock exchange called Tokentus Investments. I know the name is a little tricky to remember, but German, I promise it sounds normal. And we are investing in equity as well as tokens, as well as hybrid models, and now recently also started a liquid portfolio. We generally tend to invest seed Series A stages, and as mentioned, also listed tokens now. And yeah, pretty sector agnostic, to be honest. A lot of the investments we have made, however, are within the, I call them financial services infrastructure space, because a lot of the backers and shareholders of Tokentus are German banks or the German banking network. Hence, we can provide most value to companies that have some sort of connection or need to be connected to the banking network within Europe. And I'm also the venture partner at Edge Capital, which is a relatively large DeFi hedge fund with about 500 million AUM, doing a lot of liquidity provision for early stage protocols.
Thank you, Mona. Over to you, Michael.
Thanks, Sarah. Hey, Juliet. Hey, Mona. Nice to be on the panel together. I'm Michael Gord, serial entrepreneur, investor. Been focused on blockchain adoption my whole professional career. Went down the rabbit hole in 2011, all in 2013. Been building blockchain businesses since it started, pretty much. GDA Capital, we're all prop capital, focused on pre-seed, seed. We've done some private equity, a few LP investments, a bit of public equity as well. So pretty boutique with our deal structuring. We are long-term partners in projects. We get involved more actively than just providing capital. Fit in our portfolio, fit in our ecosystem is super important to us. Increasingly, also, I think probably a trend in venture is to be increasingly focused on liquid now with where the market's at today. Additionally, we co-found businesses and or acquire businesses and operate them. One I'm super excited now that I'm the CEO of is Flashy Finance. We acquired a protocol, so hey, Mark, nice. We acquired a protocol, so now a protocol, but we're a financial layer for internet culture. We're acquiring culture businesses, games, social networks, music businesses, etc., with users layering in financial services to turn internet culture into modern retail banks. Thesis is that kids today are not going to set up their bank account by walking into JP Morgan. They're going to play games, watch videos, listen to music, earn a few dollars, and they might as well be able to access all financial services natively from the internet culture they are already engaging with. Yeah, so it's a bit about me.
Exciting times, exciting times. Thank you, Michael. Over to you, Juliet.
Thanks. Hello, everyone. Hello, Mona. Hello, Michael. Hello, Sarah. It's so good to see you again, at least online. So thanks a lot for inviting me or having me. It's always a pleasure to collaborate with the blog for sure. So my name is Juliet. I'm a fund partner of Newtribe Capital. So we are one of the probably earliest Web3 VCs who were started in the UAE in Dubai 2020. So we've been active for the last 5 years, invested in close to 200 projects. So nowadays we are focused more on the prop capitals. So that's why we decided to become more on the ecosystem players in the UAE. So we are doing a lot of other activities in order to grow the ecosystem in general. So we do a lot of events. Probably that's how people know us in the UAE. So we do, and recently we're launching also one big initiative. It's RWA Labs, because there is an immense growth of the interest for RWA in the UAE as well. So, and yeah, we keep investing in projects, of course, more selectively, more strategically, because it's not about capital deployment nowadays, I believe. It's more about like having long-term collaboration with some project that you see a lot of opportunities for the business growth. It's not about the speculation about Web3 in general. It's there you can leverage Web3 technology in order to build the proper business. That's basically what we focused recently.
No, it's a super, thank you so much, Juliet. Yeah, also Newtribe, you're super active in the UAE, so super exciting also to see on the next chapter what you also mentioned with RWA. And it's a good part what you mentioned. I'll continue also with you, and then we make the round on that. If it comes to narratives, right? Like we know like sometimes there are hypes now each year there's a different hype and what is really fundamental and how's it for you when you evaluate and also now in your sectors you're focusing on, right? Um, Narrative versus numbers, like how's it when you evaluate early stage Web3 projects? What is for you then the key? Let's say, Juliet, when you mentioned also RWAs, like maybe each one of you can tell me like how important is for you storytelling versus the fundamental?
Starting from me, the round back.
Yeah, let's do it.
Okay. So let's do it. First of all, narratives. So we've been in the space for quite a long time, and of course, like the way we do the due diligence is also highly depend on the market fundamentals, right? Because maybe sometimes you can say, okay, this founder is cool. Maybe they will adjust the narrative, and then okay, the project will be successful. If the market is down, so when of course you're becoming more cautious. And then the first and the key thing for me nowadays, I believe it's the valuation. It's the FDV of the project, because now what we see, it's not about the hype. There is no Web3 hype any longer, but there is like a strong Web3 tech in general that businesses and people might be used for the for some specific purpose, right? So that's why, like, I always call it like something like a market capacity. You need to understand your market capacity, then you form your valuation. You need to do the proper SWOT analysis and to be able to compare your product to the similar product if any existing in the market. And if you're building something unique, better not to be overconfident with the valuation that you're set up initially, and then you do like a pre-seed round. It's better to have a proper proof of concept, and then you can just play around the valuation based on the result that you achieved after having like initial users, after having the proper test of the product, and being completely sure that the product that you are building, it works at this market. So that's why, like, if you ask me, like, what we are investing in right now, I can tell it in a very simple manner, whatever makes sense. Whatever makes sense in the from the angle that, where we understand that there is a market for this specific technology and it's not oversaturated. So where we could like be together with this project and we understand we can expand this technology even in Web2 businesses, because what we can see right now is the proper Web 2.5 that's everyone in Web3 has been talking about for a long time, and finally we see it's happening. Supportive technologies that we see is of course like AI, because that's something of course you can use for a traditional market. Of course, DP as an intersection between real product and the technological aspect, where you can just leverage blockchain technology for the SaaS solution that could be used. And then, of course, RWA, because it's the best entry for traditional businesses into the Web3 space, where you can be confident because at least because of the regulatory space getting lifted recently. And we have the proper regulatory framework in the UAE specifically. So at least that's the way to go, how to operate within the legal framework. And if you have real business and you can it's the easiest way to expand your business if you have the community and to open up the other markets. Of course, if you have community, if you have the real revenue. And we still actually looking actively into the infrastructure and the different part of the toolkits, but those toolkits should be also focused on the B2B businesses. Also interesting part that you mentioned during the introduction on the blog, because usually people tend to think that Web3 VCs invest in tokens as well. But I believe there is no specific definition for the Web3 funds nowadays, because as we can see recently, some equity investment could overperform while the token investment could underperform. And sometimes it happens for the same product. So that's the reason, like, yeah, some investors just realize, like, you know, if you have strong founders who understand how to do business or who are the proper entrepreneur, then you can just bet on it. And then, like, you know, you do both equity or tokens, or sometimes even the token investment could not make sense. So maybe we could elaborate on that later, but I don't want to take a lot of time. And yeah, just give the word to my colleagues.
Super, no, super great aspect. Even it's good you touch basing already on the next aspect, token versus equity, but we're gonna get into that in the next stage. Yep. Yeah, Michael, over to you. What is your take on narrative versus fundamental, especially now on the sector you mentioned you're focusing on, right? Especially consumer facing.
Token versus equity is a good one. I think that the right answer now is both. If you've been building and investing in blockchains for as long as the four of us have, there is possible risk on both sides. So better for projects to provide exposure to investors with, you know, that are strategic to share in the upside on both sides. So there is aligned incentives. The alignment of incentives is something that's super important to me and to us. But to go back to your first question of narratives versus fundamentals, in general, I opposite of chase narratives. I think if something is the trend of the week, and you said there's Sarah, you said there's a narrative every year. I think there's hot narratives that are more like every month, every week, certainly every quarter. There are changing narratives. But I think if something is too hot from a narrative perspective, the valuations get totally out of proportion to the actual value that has been created. And if the value is above the actual fundamental value of the business, it's easy for there to be a misalignment of incentives, which again, alignment of incentives with the capital market and builders is, I think, super important. So for us, yeah, 100% fundamentals. We're super thoughtful now as far as valuations and how to value digital asset businesses on the equity and token side. Fortunately, now we've been through, you know, years of this stuff. Not us. I mean, in general, the market has. And now with actual real products in market, real users, real revenue, it's possible to bring more sophisticated investment valuation metrics into digital assets, is not just based on speculation or the possibility of what can happen and being early. Yeah.
That's super good. I think also, as you said, about hype that's so fast moving, it's really about, okay, even as from VC side, right? You set up, okay, this is you gonna focus on. And I mean, this is even for due diligence purposes, this is like where you wanna set your fundamentals, and it's not about chasing the next. It's so fast moving, as you mentioned. So it's good to have a core, to focus on.
As venture, better to be positioned in narratives you think are likely to be emerging and wait for the market to pick up the trends, as opposed to chase the trends. You're probably too late if you're chasing a trend.
Exactly. No, completely agree. How's your take, Mona, on narratives versus fundamentals?
Yeah, I would completely agree. I think a key point to doing well in a relatively difficult venture capital space within Web3 is actually to understand the next narrative before anybody else does, or before the mass market does. And that's not easy, right? Because we're all in a very nascent industry, even if we've been here for 10 plus years, but there's still new things coming up here and there that maybe are harder to predict. However, in general, I think no matter what, if you're looking at a project and it is within a narrative or it is not, it has to be grounded in some fundamentals and reality, right? So it has to be a vision, but it has to have clear traction signals as well. So it has to have technical depth, it has to have a clarity of the go-to-market, a very strong founder market fit, ideally some, ecosystem pull already, and in the end, in my opinion, a great narrative without any of those fundamentals is really just noise and a very short-lived hype that if it can pivot, great. If it cannot, we've seen a lot of those examples, I would say, in recent months. But I think the founders, as we all say, but it is true, the founders that are able to make a very complex idea, a very complex problem, and find a simple solution that is valuable in the market that is actually needed, and really show progress against the hard truths of the economy, and not just, promise big dreams based on a narrative. That's the gems that we need to look for.
This is super important aspect. Also that you mentioned, especially when it comes to evaluating projects, because even when I've been in touch with some family offices, they said sometimes it's so difficult if you not have that deep expertise. And this is where it comes actually to the next question, like what is for you the most relevant? Let's say we all getting so much influx of pitch decks, maybe via email, via Telegram, in person. But what was for each one of you, and I combine it, those two questions, what was one thing that you saw in pitches, this is the most important, this is where it really stood out? And what was like a biggest deal breaker you experienced in your VC journey, like red flag, something, an incident that you remember was like a big no-go for you? Let me this time kick off, with you, Juliet.
Okay, for me again, pitch deck is an interesting part because, as we I start from the thing that usually, especially nowadays, there is a huge amount of information that investors are receiving on a daily basis because so many people, they build some product, and of course, as my colleagues mentioned before, the deal, and you mentioned before also, like the deal flow in the Web3 space is super active. So everyone is actively sharing some deals. You could have multiple sources of receiving different deals. So, and of course, like everyone is sharing in the form of blurb. So basically a very concentrated information about the product that one is building. So that's why the first impression usually comes from the blurb itself. So lots of decks are not being opened just because the blurb is not fit the investment thesis. So that's why that's the best thing, in first step you need to do is to focus on the proper structuring of the blurb and highlighting all the bullet points of the product that you are building. What is super important is to be able to name the product within one sentence. And just also to elaborate on what Mona said before, it's very important not to play in the narratives, because sometimes you can see AI layer on DeFi and everyone just trying to extract more and more trigger words in just one name, and then you just read it, you understand it doesn't make sense. You don't understand what it means, but it's just like the play of trigger words for investors in order to onboard as many narratives as possible in the product naming. So product naming, product positioning, it's the most important, and the storytelling, because in Web3 space, storytelling is more important than anywhere else, because as you mentioned before, community is the key pillar to build the product itself. And then, of course, number two thing is how you're going to incentivize your users, because, why they should go and buy the thing that you're building. That's what we're looking at as well. And of course, it's on our website. It's our motto is investing in people. And the people are the driving force behind every single product that is successful, not only in the Web3 space, but I believe, in the whole startup space at all. So we try to understand the founder's mentality, the type of personalities they are. It's not about even the previous experience, because maybe you could be a successful founder with like a successful exit back to the days, but now you don't have enough of driving power and the motivation to build the product that you're building right now, right? So you should have that kind of, basically dedication to the thing that you're building, and to be sure that that works. In terms of the red flags, I will mention those that I came across recently, and of course I call it's valuation delusion. So, because what happened, as we discussed before, and I believe my colleagues agreed on that, that before like setting up 200 million, 300 million valuation could make sense because there was a market capacity and it was easy to get launched on 1 billion valuation. So what's happening right now, there are quite a lot of traditional businesses. They would love to use Web3 technology and launch their tokens. So if they say we have millions of users, we are running our business for 2 years, and now we would love to launch Web3 products. So it means that we could start from 100 million valuation straight away, just because of traditional business that we have, which is basically a delusion, because the whole valuation is changing. So even if you have users, even if you have the product, you need to prove the investors that you can able to raise from 100 million to $1 billion valuation within a certain period of time. And here is the financial projection that could prove that I could accomplish it within a year or 2 years. So the whole thing is like, to escape this red flag, to be able to prove why the valuation that you're set up right now is relevant, and to have the financial plan and the go-to-market strategy to make it happen within a certain time frame.
No, really, really valid point. It's especially with the red flags, with the valuation part. I thought very often, I think most of us, it's sometimes just over exceeding. And how is it for you, Michael? What was for you like the biggest also deal breakers, red flags that comes to your mind where you say, okay?
I think the biggest red flag is because all VCs are in the relationship business for the most part, and if someone, without asking you how your day is, or without any preface, just comes up and pitch slaps you, immediately goes into a pitch, I would say that's an immediate overwhelming. It's just too overwhelming to process the information. I think that if you're looking to connect with an investor, you should do it through a mutual contact, or in a way that is more respectful of the relationship and the amount, and understanding the amount of information and deal flow that investors need to process. So yeah, I would say the biggest red flag is someone immediately going in and pitch slapping you. Aside from that, I would say, unvalidatable valuations, and no context in terms of how you are coming up with the valuation, just words. So I would say valuation and pitch slapping, biggest red flags.
No, thank you, Michael. How about you, Mona? What was your the biggest red flag you experienced?
Yeah, I think very briefly, just on the first question, and then I'll definitely answer the red flags, because there are a few. But I think what really, in my opinion, makes a pitch kind of stand out in a market that's kind of flooded with decks and white papers and a lot of hype is clarity, right? When an founder really understands their market, they really understands the edge they have in their market in simple terms, doesn't overhype, doesn't slap you with formulas and very difficult technical terms, but is actually able to simply, clearly define who their users are, who their moat, what their moat is, what their go-to-market strategy is, and really grasp an investor's attention with that, having or being able to show some sort of pipeline, strong design partners, for example, already some community, I think that's really, really what stands out in a market that is very much like Juliet, and I think Michael also said, full of, terms and just lots of narrative overblown without any real, value use case long term. And the red flags on that, I have two which I think are quite important. One is related to what I just said in some way, which is vanity metrics. So if you give me lots and lots of vanity metrics, I think that's a major red flag. I really want proper user base. I want engaged users. I want proper feedback loops. I don't want an arrogant founder that just gives me lots of vanity metrics, like how many Twitter followers they have, because that really, as we know, doesn't really equate to actually engaged users and long-term sticky users. And the second thing that I think is very important, which I've seen a lot of founders make that mistake, is that they put the name of a VC or an angel investors onto their blurb without that person or that company actually having said they will invest, right? Clearly, properly stated, signed documents, and given a clear, hard commitment. I have seen my name on pitch decks where I haven't been onboarded as an advisor. I have seen the company's name on blurbs where I haven't had more than one meeting with the startup, and that really, no matter how good that product is, for me, that is the end of our relationship, at least in the short term, because I just don't think that that's a very good way of managing, and similar to Michael said, also be respectful with the investors and their time and their effort. So I would say, please don't do that. It's not worth it. I know sometimes names help. I understand that. I used to be a founder myself. I completely understand, but better put the names on your blurb and your deck where you have 100% commitment.
No, 100% agree. I think, as you mentioned, also, it's all about first also the relationship building, the trust and credibility towards between the founder and investor, and also on top of that, then it comes, okay, what are they building, how they are building. But also, I can give you also just two examples, because Michael, what you said with pitch slap, I mean, I'm sure each of you had like funny situation. Even once I got followed until to the restroom just for a pitch, so that was pretty awkward. So they're like a weird situation, or even what you said, like if there's incorrect information, this is like a clear deal breaker as well. So I think all of us, we had our own stories there. And yeah, I think considering the time, we had so many inputs. I think there are even so many topics we can even talk about more. I actually want to open right now the Q&A session for our audience. If you have any questions, you can state them right now in the question field for our panelists. And let's see what we will have. So again, just as a guidance, on the top right, you'll find the question field, the text field. You can state your question there. Maybe in the meantime, maybe we can do one last round. What is for you like the hottest sector you believe in? Not a narrative, but the top sector. I mean, some of you mentioned already, but what would be 1-2 sectors you say, okay, this is where you're bullish on, personally or from VC side? Yeah, maybe let's kick off with Michael, with you.
I'm biased with flashy finance. I would say CultureFi, providing financial layer to internet culture. Another is monetizing the data layer of blockchains. I think the Bitcoin blockchain in particular, we treat Bitcoin as the the best store of value in human history. It's also on the most secure database in human history. I think that an increasing amount of data is going to live on increasing amount of high value data will live on the Bitcoin blockchain is the most secure database in the history of humans, replacing cloud effectively. The third I would say is decentralized AI. I think real world assets are going to be the hottest trend this quarter though, stables and real world assets.
Super good, super good. How about you, Juliet?
So I mentioned quite a few before. So generally speaking, I believe in innovation, right? Because the market right now is structured in the sense that there is no separate Web3. There is always the intersection of different technological layers in order to fit the product, which is like, to build a product that is fitting the specific niche, specific clients, or the specific market. So I do believe in innovation in general.
Mm, mm. Good one, good one. How about you, Mona? You're muted.
Right, there was me talking to myself. At the moment, I'm looking a lot at more consumer plays, and specifically in the finance consumer. So this could be quite a broad range, right? Making investing into our space more applicable, easy, looking at different DeFi protocols, looking at ways of engaging a wider audience into the Web3 space. I think that's a very interesting sector. I would almost consider, stable coins even within that segment. That's kind of how I think about it. I do think that we are slowly moving towards businesses that can actually attract and market to a broader range of users beyond only the Web3 native crowd, which I think a lot of the middleware and technological aspects are focused on. But we need to go a little bit beyond that. And what I think is really quite exciting is also looking at industries that at the moment maybe not necessarily are the biggest hype in Web3, and speaking to founders and entrepreneurs in that space who I've identified real problems which actually can be solved through blockchain technology, and figuring out how can blockchain technology be implemented to build solutions, products in industries that have a much broader user base than just the Web3 native crowd. It's a research project more so than an actual example I can provide here, but I'm quite interested in looking into those spaces.
Super. No, thank you. All valid points. Even myself, I truly believe RWA, even AI agent narrative as well, and stablecoin, especially for payment solution, payment rails is also one thing I'm also bullish on personally. We got already a few questions in. Let's do one thing. Let me check the one in token deals. How do you underwrite or model liquidity and exit strategy when markets and regulations are unpredictable? Who would like to take on that question? I think it's especially maybe in terms of token deals. Yeah, Juliet. Mm.
Yeah. I can basically take that on. So in token deals, but we've been like doing token deals without any regulations in place at all for quite a long time. That there is a risk. The risk actually, I believe, if the company goes bankrupt, there is no kind of court globally that could protect the pre-investor, right? So in this case, of course, nowadays it's beneficial to do safe and token warrant. So this is the risk mitigation strategy that became quite active like for the last few years. So at least you can secure yourself as a stakeholder in the company. But in this case, in terms of due diligence, it's important to understand what kind of company you're investing in. Are there any assets on that specific company? And we will protect you in the certain risk on the token side. Then it comes to the certain token side, of course, like, the exit strategy for investors in token is to sell that from the market when the token is getting released, and that's why the vesting schedule, it's the most important for investors. It's interestingly, I've seen one tokenomics recently, and of course, tokenomics, it's the key element. What I'm saying to multiple projects, it could be linked to the financial projection. At least they should understand how they're going to spend money and how they're going to make money for the next few years. And then it comes to tokenomics, it's important to count how many tokens are going to be at the hand of the team during the certain period of time before you as an investor are getting your tokens back. Because I've seen one tokenomics before, it didn't make sense, and especially during that ICO boom, because again, the market could observe that valuation, especially if the product is hype. Now, there is not that much speculation on the market, so then it comes to the tokenomics. It's very important to understand, like, are the team tokens locked? If they're getting any treasury ecosystem or whatever, what is the vesting schedule for that? If assume, for example, this project would love to make X2 or X5, or I don't know, like, double on the valuation that they are raising early stage and they see that pre-seed round. So you could basically understand the amount of money that's going to be released for this special purpose that the team is taking. Like, for example, ecosystem growth. And what we discussed with one project recently, like, it happened that they're going to have like a $20 million on a monthly basis or something like that just for treasury and ecosystem growth. And the marketing, I said, like, sorry guys, like, if you're expecting that financial projection, it doesn't make sense for you to have $20 million spent within this period of time, right? So it's a very complicated thing, but you need to be able to read the tokenomics between the line to understand exactly if you're going to be like an exit liquidity as an investor, or you are at the same kind of, at the same group with the team, and they would love to collaborate with you. So that's why they're confident and they are locked for a few years, and they're here to build the product that they're building.
Very valid point. I think this is also one of the keys in general for due diligence, especially if it comes to crypto Web3 project. It needs this deep dive into the tokenomics to really to understand if it makes sense. So thank you, Juliet. There has been a further question. As family office interested in direct exposure, how do you structure co-investment opportunities, and what signals are you looking in as a good co-investment partner? So who would like to take up this question if a family office wants to get engaged and want to co-invest?
I would like that. Sure.
Go
Mona,
for
you want to go ahead?
Yeah, I just want to mention like one thing, and not specifically, and then I believe Mona can elaborate on that. You need to understand what kind of fund structure of the people that you would collaborate that with, right? If it's LP structure, of course, the best way is to join as an LP in the fund. If it's a prop investment capital, and then it means that you can just negotiate some specific terms. Maybe you could have some other way to collaborate and doing either direct investment or co-investing. It's becoming flexible. So the key element is, of course, or it's a regulated fund. So the key element is to understand the fund structure of every vehicle you would love to collaborate with. Yeah, that's it. Sorry, Mona.
No, I mean, this is pretty much what I was also going to say. So I completely agree. I think, there's different ways of being part of it. If you want to do direct investments, oftentimes to be an LP within a fund, and then if there is an allocation within a specific project that allows for further capital to come in, there can, of course, sometimes be opportunities to also invest alongside with the VC. But I think it's important to also be aware that a lot of the time deals are actually quite hard to get allocation in if they are very, very specific, or they're maybe a smaller round because it's very, very early. So this might not always be possible. So being an LP is, I think, the the easiest way. Understand the question was about direct. Again, sometimes there can be opportunities to co-invest alongside. And here, what I think one should look for and what we look for is essentially what value add can you provide, right? What is your network? What is the value that you can provide to the project? Maybe what is the project looking for? Can there be a fit in with regards to need and want? And that of course is a case by case basis. Alternatively, there are also obviously syndicates or SPV structures that can be formed, right, amongst different investors that come together to fill a larger check, and they all can provide their separate pieces of value to the company. So I think that is also an option. Of course, that would require then somebody to source the deals, however, right? And this can be, again, partnership VCs that you work with, share deal flow with, or you yourself go into the market and source these deals directly, but fill larger check sizes with other partners.
Then no, thank you, Mona, and also Juliet, very, very valid. And there's another question from Mark. Mark, you were mentioning about Web4. So question to the panelists: are you already seeing further than Web3 into Web4? Who would like to take that question?
I can explain again in few sentences. So as I mentioned, like now we are experiencing the Web 2.5. Honestly, it's not even Web 3. If we're talking like about Web 4, then we need to think about like the broader decentralization. And there is a joke that if you don't want to get stressed, don't even think about decentralization. Because there is the famous triangle by Vitalik, which is basically security, decentralization, and something else. So basically, it's always, if you're going for decentralization, you have to sacrifice on something else. So far, we finally experienced the mass adoption. We experienced the adoption of Web3 technology by institutional players. And of course, Web 4, Web 5, it's going to be the next stage. But it's better, like, to focus on what we are having right now. It's to make that proper Web3 happening.
That's super good. How about you, Michael? You would like to add something to that, or about the Web4?
Am I on? No, I'm not on mute.
Yeah, you were on mute. Yeah, sorry, you were on mute. No worries.
Yeah, so I think that that's cool to bring up Web4. I'm super excited about it. I think that it's network states, digital civilizations built on top of networks. I think the reason for it, or that the internet is going to move in that direction, is that maybe it was Mark that asked. That's funny. I think that the reason for it is that with AI now dominating the internet today, I think Gen Z, Gen Alpha kids are going to increasingly go towards places on the internet where they belong, and where there's meaning, where they know that they're interacting with other humans. So yeah, I think that that Web4 is a narrative layer built on top of Web3. It's digital civilizations. It's places where users become citizens, where transactions become experience points, where everything that happens on the blockchain or on the internet is part of a narrative, as opposed to just users being guerrilla marketed to transact in ecosystems to earn revenue. Yeah.
No, super nice. No, thanks all. Due to the time, we had a lot of questions actually, so thanks everyone for asking. For the other ones, we will get back to you post the webinar from the blog team. And I just want to say as well, thanks to all of you. It was a super nice panel. I really enjoyed it. And to everyone who's also on the line, thank you also for joining in today. If you have any questions or want to chat with us or the team, please reach out to us. I will just also share our email link. So either myself, Sarah, also David, you can reach out to us, and happy to continue this dialogue. So yeah, thanks again to all of you, and see you very soon. And to everyone in the call, have a good week ahead. Thank you.
Cheers, everyone.
Thank you.
Thank you.
Bye.
Cheers.